Blessed Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed to Invest. And today we are here to talk about how to get started and how to trade with $100. We're going to talk about what broker you should get on. We're going to talk about what you should trade, how you should do it, etc., etc. But before we get into the video, make sure you spam the like button down below. Spam the like button and also sub for more content like this, because I'm going to show y'all how to grow y'all trading accounts and just how to trade properly. So getting into it, a lot of people, when they get into trading, they don't really have a lot of money. The average Joe usually only has a couple $100 to really trade and understand how investing works. So $100 is really perfect. I don't recommend, especially for beginners, I don't recommend going in with $5,000, $10,000. Even if you have that at your disposal, $100, this video is going to be perfect for you just starting out, because you need to understand how the market works and how it performs. So trading with $100, you're able to get, okay, this market moves this way when it goes up, it moves this way when it goes down. Companies, when their earnings come out, stuff like that. You'll figure that out as you're trading with $100, and you're able to scale up later on in the game. But this is definitely for the beginners out there that really want to understand how to trade. So broker wise, I recommend a non-commission broker. When you're going through trading, the one thing that is going to get you is the fees and the commissions. A couple of years ago, brokers, so Robinhood came out. I think this was like I can't exactly remember when Robinhood came out, maybe about 7-8 years ago or so. Robinhood came out, changed the game, and it came out with no commissions. And then brokers started following suit, like TD Ameritrade, Interactive Brokers, E-Trade, Fidelity, etc., etc. And they began to give no commissions on their brokerage platforms as well. So as long as you're on these most of the major names, American brokers, you should be okay for putting $100 in and not having to worry about fees. The one thing, though, that I do recommend is with $100, you're not able to buy multiple shares, and it's harder for you to position size. What is position sizing? Position sizing is when you are able to, so let's say you have $100 and you only want to risk 1% of your account or 2% of your account. And if you're not familiar with position sizing, I'm just going to break this down very quick, but I have a video where I went into extensive detail on position sizing. But basically with position sizing, let's say you only want to risk 1% of your account or 2% of your account. If you were to buy a stock that's $100 and you need to put your risk at maybe 10%. So let's say in this scenario, for this particular stock, we need to put our risk all the way down here, but we're buying it. This is just, for example, we're buying it right here at $100 and our risk is all the way at 90. To lower your risk, you will buy less shares. But if you have an account that's only $100 and you can only buy one share, you can't not risk the 10%, because it's going to, because the trade isn't going to work out. You might be hit out by noise. It's just not going to work well. So the good thing about brokers like Robinhood and Webull is they give you the ability to use fractional shares. So with $100, for example, let's click on this one. You can buy fractions of you can buy fractions of a company. So in this example here, I have the average cost of the SPY is $427.04. But shares, I have 0.03. Let's make that a little bigger. I have 0.03 of the share. So I only have $11 into the position. And what's good about that is I can diversify and I can position size in. So I recommend, if you're only working with $100, go with a broker that allows you to buy fractional shares of companies. TD Ameritrade, this broker right here, does not allow that. Fidelity does not allow that either. So definitely go with a commission-free broker and 2, go with a broker where you can get fractional shares so you can size in correctly to your plays, almost like you're trading a larger account. So that's going to be very critical in this. Next, after you found your broker, I recommend Webull or Robinhood. Me personally, I prefer Robinhood more. I just like the simplicity of the app. But if you want to go with Webull or another platform, that is fine as well. Then you want to figure out how to get into trades and what is the best strategy for you. So there are a lot of different strategies that you're going to figure out throughout this game that a lot of people use. Some people use breakouts. Some people use pullbacks. Some people use VWAP crosses, EMA crosses. There's a whole bunch of different strategies that you can use when trading. But when you are deciding to trade with $100, I definitely recommend you swing trade. And what is swing trading? Swing trade is where you're holding plays for a couple of days or a couple of weeks. I don't recommend day trading because with you being under $100, it's going to be, you're going to be restricted with the PDT rule where you won't be able to trade as much. So swing trade, it's going to get you really profitable really fast. And honestly, they say swing traders make more than day traders anyway. So going into swing trading is definitely something I recommend. So going with $100, get your no commission broker, and then begin to learn how to swing trade. So with your swing trading, you want to find quality companies that are at a discount. How do you find these companies? You're going to look through scanners, and I recommend TD Ameritrade to do this. So if you're on Robinhood as a broker to trade on, use this chart, the TD Ameritrade charts, to actually analyze your companies where you can put your lines out there and really see, okay, this is where the company is going to bounce at. This is where the company is going to bounce. These are the highs, the lows. On Robinhood, it's just not as clear. You can't really see what's going on. It's kind of icky. It's not as clean. You're not getting your candlesticks and stuff. So definitely go with that. So you hop on TD Ameritrade and you're able to determine, okay, this is the SPY in this case, but let's say this is a solid company. You're going to want to buy at support levels as your strategy. Buy support levels, position size in. If you're not familiar with it, I did a whole video on how to purchase at support levels strategy wise. But what you want to do, you want to position size in to these positions, and you're going to add a small portion of your $100. So let's say the way this is set up, you're going to put $50 in, and you're going to swing trade it for a couple of days, and then you're going to sell it. And then maybe you have another $50 from that, and you're going to take another $50, and let's say you buy AMD, another great company that you saw on the watch list that is also dipping down, and it bounced. You want to buy that here, maybe put $30 in here, and you're able to position size in correctly because you're not buying whole shares. You're buying fractional portions, so you're not worried about this $80. You might buy a quarter of this share, and you're able to get in and you're able to purchase it. And with this, really all you're doing with this $100 is just learning how the market flows. You're not going to be making a lot of money, but you're going to understand, okay, when I buy at these certain levels, the market goes up. When I buy at these certain levels, the market goes down. And you're going to be able to get accustomed to it and feel more comfortable in the market. With $100, you're not going to make a lot of money. I'm just going to let you know that now. There are people on YouTube that show, oh, I made $1,000 off of 100. Yes, that is possible, but they're taking a lot of risk, and a lot of them end up blowing up their accounts. The probability is just low because you have to take so much risk on to do that. So with this, just understand it's going to take a little bit of time. You're just going to understand. It's kind of like riding a bike. You're just getting the fundamentals down where you can actually understand how things are moving, and then you can eventually add more money to the account. And on top of that, you'll learn how to trade without emotions. Emotions are going to be a very important part of this game, where when you have a lot of money on the table, let's say you have $10,000 in a trade, it's going to feel a lot different from you trading with $100, because when you trade with 10 grand, a $500 loss is only what, 5% of your total account. So you taking a 5% loss on the day is very probable. And people thinking about, oh my gosh, I just took a $500 loss. That could be a paycheck for somebody. So it can be very stressful to lose $500 in a day. But when you trade small, you can go on without as many emotions and just understand how the thing works. That's why I don't recommend, even if you have a lot of money, don't go in with all your money, because you need to understand how your emotions play out in this game. You're going to be dealing with fear. You're going to be dealing with greed. You're going to be dealing with the emotion of when the stock is skyrocketing. And you're like, oh, do I sell? Do I sell? When do I sell? And you don't need to be going through that as a beginner, just trying to figure out how everything works. This $100 is just to learn how the game is played, set up your positions well, and slowly grow your account. And honestly, if you grow it correctly, it might take a little bit of time, but you can even just slowly, instead of just throwing $10,000 after you're comfortable with $100, and let's say you grow it to 200, you don't need to go in and throw $10,000 in there and be like, okay, I got this. I doubled my $100. I got this. Let's throw 10 grand in. Let's do it. I don't recommend that. I recommend going slowly, maybe add another 100 in there or add another 200 and put it in very slowly. Because the emotion from going from $100 to $10,000 is a totally different game. When I first started, that's what happened to me. I had like $80 in there, and I was like, oh wow, I grew. I think I had like 50. I think it was like $50 in there, and I grew it all the way up to 90. It was like $90 in like a month, and I was like, wow, I got this. I got the game. I'm good. And then all of a sudden, I threw $1,000 in there, and then you see how the emotions play out. It's a totally different ball game when you're trading with a little bit of money that you don't have, you're not invested in, versus a lot of money where you're expecting to make big gains on. So just slowly add money to the account. Don't add a lot of money, but slowly add money and get a little bit more comfortable. Kind of like how they say boiling a frog in a pot. If you throw a lot in there, if you turn up the heat a lot, it's going to jump out. But if you slowly turn the heat up, you're going to be comfortable, and the frog isn't going to boil. But in this case, your account is going to slowly grow. So keep that in mind when you're trading with $100. Start small. Start on a commission-free broker. Start with a broker that has fractional shares, so you can position size in well, and then trade companies that are at a discount where you have a high probability strategy of your play working out. And just take the time to understand the game and how it works, and you should be fine. But if you have any questions, let me know down in the comment section down below. And that's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed, and I'm going to see you next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.